Good afternoon, everyone, and welcome to the Market Close Report for Thursday, the 16th of July. Well, the Aussie market continues to have quite an unusual week. In fact, today the ASX 200 was completely flat, finishing at 8,840 points. It's actually the third time in 4 days now that the market finished flat, and this is a very rare occurrence. So it's usually the sort of thing that you see around Christmas rather than in July, but we've had very little movement. There has been relatively volatile throughout the session, so intraday, and yesterday's lift of 0.33% was also quite unconvincing as well. In fact, we were up slightly, but the market was up about twice as much a bit earlier in the day. So markets very much just waiting on the sideline at the moment, perhaps waiting for some type of catalyst. So the move's very much not convincing at all and lacking direction. Now, it's perhaps not surprising because there are probably more questions than answers in markets at the moment. We did get off to a solid start this morning, and that was largely off the back of a small improvement out of the United States. But understandably, even those gains overnight were quite modest. So the good news, the reason why we had markets last night improving was actually a softer than expected inflation report for business or producer prices a day after softer consumer prices as well. So what this has effectively done is it's seen market pricing for a rate hike in the US at the end of this month dropping even further. Was at 45%, a likelihood a couple of days ago, to just 10% now. So that's one of the positives. There are still concerns, though, of course, around the Middle East. There's no end in sight for the conflict in that part of the world. The US launching a new wave of strikes on Iran, the US reimposing a naval blockade of Iranian ports, Iran also making its own threats as well. So all of this, amongst other things, adds uncertainty to inflation, to oil prices, which are still elevated as well. And finally, the US profit reporting season has kicked off in the past week or so, and we've had largely well-received results coming through from some of the major American banks, but the big test is yet to come over the next 3 to 4 weeks when we get many of those chip makers and tech companies releasing their results. They've been very much the driving force of the gains out of the US over the past year. So here's a stat: the S&P 500 gains over the past year about 6 times the improvements we've had for the ASX 200. So all of this, of course, is still out there, and markets are wanting a bit more detail before overcommitting perhaps. But if we look at the sectors locally today, there are 4 sectors that fell. 2 that did most of the damage: the materials and energy stocks that were both down about 1.5% today. So the price of gold fell around half. Oil prices actually did tick a little higher last night again, but energy stocks not really responding positively. Things quietened a bit in Asia trade on the oil price front, but we've got to remember as well that energy stocks are still lifting for a third consecutive week. Outside of materials and energy, we did see consumer staples and utilities, a defensive area, under a bit of pressure, and the rest of the market was higher. So the gains coming through from many of the major banks was helpful. We also had communication services, consumer discretionary, and others doing reasonably well. Now, if we look at the winners on the market, we had AMP standing out today. It actually ended up finishing higher by almost 10% today. Now, the financial services group raised its guidance, basically flagging first half profit to be between $170 and $180 million. The market seemed to like that. We had REA Group up around 6.6%. This is a group that operates the realestate.com.au website, which is the largest property advertising site in the country. A broker today said that he reckons that the stronger than expected property listings that came through last month could help boost profits. Perpetual up about 1.4% today. The money manager received a sweetened takeover offer from a Swedish private equity firm. It's actually a 2% lift on the original offer that was made just a couple of weeks ago. And then Fletcher Building, 3.6% higher as well. Now, its share price rose largely off the back of a share price target upgrade, which came through from a broker today. And I should also mention dividend payments, because we've got 170 ETFs, or exchange traded funds, that are paying out their dividends today, including Vanguard Australian Shares ETF, or VAS, which is the largest of its kind, giving exposure to the entire Aussie share market. Now, at the moment, there's roughly 470 ETFs on the Aussie market, so 170 of those are paying out dividends just today. Now, as far as the losers go, there were a few of them. Electro Optic Systems, quite a volatile company, down 7.8%. Now its share price is down around 20% this year, but we've got to remember that last year, partly because of the rising global defence spend and demand there, its shares went from $1.30 at the start of Jan 2025 to $9.44 by the end of last year. We had Evolution Mining falling by around 3% today. There were two brokers reducing their share price targets for where they reckon the gold miner stock might be in 12 months' time. Remember that yesterday did come out with a quarterly update. It basically met its financial year goals, but it also flagged high costs for the year ahead. And then BHP down 2.3% today. Now, there were worker strike in WA. It also came out with a quarterly update today, basically saying that, there were record production for iron ore. It was at the top end of guidance as well for copper, but it also warned that copper production will be down on last year. Now, we've got to remember with BHP is that yes, it's down today, but it rose more than 3% yesterday. It went on a 4-day winning streak. It's up 30% this year, so it still is having its best year in a decade. And finally, Ora Banda Mining down about 1% after warning of slowing gold production in 2027. Now, if we look forward from here, we are in the midst of the US reporting season. Probably the big one overnight tonight, which is going to receive attention, is Netflix, the streaming service. So it's going to be out with its results. We've got American Airlines, United Health, and a few others as well. If we look forward to tomorrow, we've got about 20 ETFs that are paying out their dividends. So a lot of the ETFs kind of pay their divs around the same time. And not much on the economic front locally or on, scheduled news as far as earnings or quarterly updates. But we'll have to wait and see if there are any surprises, of course. As far as currencies go, we've got the Aussie dollar sitting just below 70 US at 69.99. Also a little weaker against the euro and the Japanese yen. On that note, everyone, hope you had a great day. Enjoy the evening. See you tomorrow.